Welcome back to Crypto Charcha, everyone. It's the 11th of March, 2025 already, and we're back with another deep dive into the world of crypto.
Yeah, it's our 10th deep dive already.
Yeah, 10th one in a row.
10th in a row for those of you who are just tuning in for the first time today.
Absolutely. And as always, we're focused on bringing you guys the latest insights and analyses to help you navigate these crypto markets. So today, we're diving into something you guys have been sharing a lot with us.
Yeah, a ton of you have sent this in.
An article taking a look at Bitcoin's recent price action.
Yeah, and it's got some really interesting analysis from Bill Barhydt.
Oh, yeah. Bill Barhydt.
CEO of Abra.
For sure. Been seeing him a lot on X lately. And he's been drawing these, these kind of interesting parallels.
Yeah, some interesting comparisons.
Between the current crypto market and the big correction that Bitcoin saw back in, was it 2017?
Back in 2017, yeah.
That's right.
Yeah, he's essentially saying that this dip we're seeing right now could be setting us up for a pretty strong rebound.
It's exactly like echoing that recovery we saw after that 2017 downturn.
Yeah, exactly.
So that's what we're going to unpack today. Is that comparison to 2017? Does that really hold up today in 2025? And what are the technicals and the macro factors that are driving this outlook of a potential, big rally, I guess?
Yeah. So as always on Crypto Charcha, we're going deep on this.
That's what we do.
We're not just going to skim the surface here.
Exactly.
We're going to be taking that technical lens to Barhydt's analysis so we can really help you refine your understanding of the market.
Absolutely. So jumping right in, Barhydt is pretty straightforward in his comparison. Right off the bat, he says this is the 11th 25% plus correction in 10 years.
Yeah, he's not mincing words.
Which kind of hints at a potential recurring pattern in how Bitcoin behaves.
Yeah, and I think what's interesting there is that by framing it as the 11th significant correction in a decade, he's really putting this recent pullback into historical context.
Right.
He's not just saying, oh, this feels like 2017 again.
Right.
He's grounding it in data, showing that Bitcoin has a history of these major corrections.
Yeah, and it's kind of, inherent to his nature, I guess.
Exactly.
And then he kind of goes on to highlight rising fiat liquidity as like a key factor, suggesting that this is going to lead to, it says, massive asset price gains.
Yeah. So when we talk about fiat liquidity, we're talking about the amount of, readily available government-backed currencies.
Or
dollars, euros, yen, you name it.
Pounds.
Basically the money that's sloshing around the financial system.
Exactly. And he's saying that more of this money is available now.
Right. And what we saw in 2017 was a huge influx of this liquidity coincided with that crypto surge.
Right, yeah.
So he's saying we might be seeing something similar brewing.
Okay, and he gets even more specific about where this extra liquidity might be coming from.
He does.
He points to the new U.S. administration, and their plans to potentially lower treasury rates, to refinance debt, maybe reduce mortgage rates, and just generally lower treasury rates.
Yeah, help banks.
To help with the banks, right,
Yeah, keep them solvent.
So how do these potential policy changes impact the overall liquidity in the system?
Well, think about it this way. If treasury rates go down, that makes borrowing cheaper for businesses, for individuals.
Okay.
And that can really boost economic activity, which in turn pumps more liquidity into the system.
Okay, so more money flowing around.
Exactly. And then lower mortgage rates could free up people's disposable income.
Right. They have more cash on hand.
Exactly. And some of that could end up in investments.
Right, in the markets.
And then addressing bank solvency through lower rates could make investors more comfortable.
So they're more willing to take risks.
Exactly. Right. So Barhydt's argument hinges on the idea that these policy moves are going to lead to more capital being available, and some of that capital he thinks could flow into Bitcoin.
Makes sense. And he also brings up China's economic situation, suggesting that they're in a deep recession, and they need those lower U.S. rates to help support their own, well, he calls it a money printing regime.
Yeah. So he's essentially saying that China's economic policies are going to play a role in this potential Bitcoin rebound as well.
It's a global thing.
Right. It's a global picture here. And if China is increasing their money supply to stimulate their economy, that could contribute to a broader environment of increased liquidity worldwide.
So more money everywhere.
And lower U.S. rates would also help China manage their currency.
Give them more flexibility.
Exactly. So the idea is that all of these macroeconomic forces are kind of working together to create this rising tide of liquidity, and that tide could lift a lot of different assets.
Crypto including.
Including crypto.
Interesting. And here's something I found kind of contradictory. He mentions the possibility of massive job cuts across different sectors, but still thinks that liquidity is going to flow into asset markets.
Yeah, that might seem counterintuitive at first glance.
It does.
But Barhydt seems to be saying that the impact of these big global monetary policies is going to outweigh the effects of job losses on asset prices.
Right.
He's looking at the bigger picture.
The macro picture.
Exactly. He thinks the sheer volume of liquidity that's potentially being created is going to be a much stronger driver of market sentiment than localized job losses.
So it's like the big wave is going to kind of wash over those smaller ripples.
That's a good way to put it.
So essentially the comparison to 2017 isn't just about some similar patterns on a price chart. It's rooted in what he sees as these similar underlying macroeconomic conditions. This huge increase in fiat liquidity driven by potential policy changes in the U.S. and what's happening in China.
Exactly. And the expectation is that just like we saw after those corrections in 2017, this liquidity is going to start looking for returns in various asset classes, and that includes Bitcoin and the whole crypto market.
Potentially leading to a big rebound.
The big rally, yeah.
But he does end his whole commentary with a warning.
He does.
He says, buckle up.
Yeah.
Which kind of implies that even if we do see this rebound, things are going to stay pretty volatile.
Right. And that's crucial to remember. Bitcoin has a history of big price swings.
Yeah, up and down.
Both ways. And I think what he's saying is that even if we do see this uptrend fueled by this increased liquidity, we should still expect periods of, really sharp price movements.
Yeah, and that's important for all of you listening out there.
Yeah.
How does this expectation of volatility factor into your trading strategies and your risk management?
That's the key question.
That's the question, yeah.
Yeah.
So to sum it all up, Barhydt's argument is that this recent Bitcoin correction, it really does mirror those big pullbacks we saw in 2017, specifically that being the 11th major correction in the last decade.
Right, and he's pointing to rising fiat liquidity as a major factor here, driven by those potential policy changes in the U.S. that we talked about, and of course the economic situation in China.
And his expectation, just like after those 2017 corrections, is that this liquidity is going to flow into a bunch of different asset classes.
Yeah.
Bitcoin included.
Crypto included.
Leading to a potential rebound.
Right. But remember,
a rebound.
He did say buckle up.
Yeah, buckle up volatility is going to be a constant companion on this ride.
Absolutely. So for our listeners out there, what do you think?
Yeah, what specific technical indicators are you watching to see if this rebound is really going to happen?
And how does this kind of macroeconomic analysis that we've been talking about today, how does that inform your trading strategy over the next few weeks or even months?
Those are the big questions. And as always, we want to hear your thoughts, so drop them in the comments below.
Absolutely. And if you found this deep dive valuable,
hit that like button.
Hit that like button, subscribe to the channel for more in-depth analyses.
And don't forget to hit that notification bell.
Hit that bell so you never miss an episode.
We're back here every day.
Every single day.
Bringing you the latest from the world of crypto.
And don't forget to share this deep dive with your friends, your fellow traders, your crypto fam.
Let's get this conversation going.
We'll see you tomorrow for another deep dive into the crypto markets.